Hey, Wall Street, how you doing?
Hey, how about yourself? I'm all right. What's going on?
Nothing much here. Happy to talk to you again. I know that there's a really interesting topic that I actually didn't know really much about, but I understand that somebody asked you about timing the market.
Yes, I got a letter from a guy, and I believe he's in Texas, I think, or somewhere down that way. And he asked me my thoughts about timing the market. He said that he had recently gotten that he had read an article in the Wall Street Journal where it was two people who was quoted. One was Abigail Johnson, Chairman and Chief Executive Officer of Fidelity Investments, and Charles Schwab, CEO Walter Bedioff, if I'm pronouncing that right, where they talked about timing the market is not a good idea, and you couldn't time the markets, and he wanted my opinion about that.
What is timing the market?
So how most people perceive it, well, not most people, but usually a lot of analysts is trying to predict when the markets are going to go up and down. And basically, you're saying I could determine from day to day the market's going to do this, the market's going to do that, and that's something that many institutional investors, many seasoned investors speak out against timing the markets. No one has a crystal ball, so no one really doesn't know what the market's going to do from day to day, and they're kind of against that. I have a different approach about timing the market and the way I see it. But before I get there, I want to read this small passage that the guy who wrote me sent me when he was asking me about timing the markets. And this one here will be from Abigail Johnson, the Chairman and Chief Executive Officer of Fidelity Investments, in this article here. So it says, and I quote, "It's impossible to predict the direction of the markets. Investors face long odds in trying to time the ups and downs of the markets. Staying fully invested according to your asset allocation plan can give investors an opportunity to participate in the market's long-term upward trends. Investors need to be patient and disciplined and have a plan. Your plan can help guide you through the periods like this. It can help to use what we call the investor's mindset, which means staying focused on the long term and using a decision process that is analytical, logical, and grounded in empirical data." In that article there. So, in looking at that article there, her theory is, like most theories, is that timing the market is not a good idea. So, my thing is this: I agree that trying to know what the market's going to do from day to day, no one can do that, right? No one has a crystal ball to know, what's going to happen. But if we're looking at it a little bit more broader, that like, what is timing something? So timing something, and this is my philosophy, it's not about timing the direct accuracy of something. It's about getting a better understanding of when things can change and when you can move on something before those changes take place. And so I kind of look at it kind of like, so have you ever been like on your way to work and you got to get to work, you got to go through traffic to get to work?
Yeah, of course.
Right. So if you've been getting on the freeway and going to work every day, you could pretty much determine like when the traffic gets heavy at a certain part of the day, right? You
Of
can
course.
on Fridays, when I get off, everyone's getting up at the same time, so everyone's kind of rushing. So around, when I get off work around 4 o'clock, the traffic's really heavy. So you figure if I take off work a little early, like around 2 o'clock or 2:30, I can beat the traffic and I can get where I'm going a lot more faster. Now,
Right.
beating the traffic doesn't mean you're not going to be in any traffic. It just means you won't be stuck in traffic. You know what I'm saying? That'll be some flow and it'll be some movement. So that's timing something. That's timing something, right? And so
Right.
I relate timing to markets the same way. When we know that markets are sky high, right, and we know things are overpriced, we can kind of determine when those things are going to fall. And I want to point to what Mrs. Abigail Johnson said at the end of the quote that she said. She said, staying focused on the long term and using a decision-making process that is analytical. So analytical is what? Separating something into parts. Reasonable. So I can determine if the stock market has been rising for 10 years and we have the longest bull run in history, I know reasonably that can't keep going. It just can't go forever and continue to rise and rise and rise and rise and rise, because history has shown that that's not the case, right? So she also says in there, she says being logical. And logical is and what is logical? Relating to something, a relation to something, right? So logically speaking, the same, it's not going to keep going higher. And if it has reached these all-time highs, that means that we don't know where the markets can go from here. So there's a good chance that things are going to come down at some point. Okay? And she also goes on to say, grounded in empirical data. And what is that? That's based on observation, right? Verification. I know from observing markets in the past, the 1987 crash, the 2000 crash, the 2008 crash, and now that these crashes have come after markets have fallen. So all the things that she kind of talked about in the end of that article, analytical, logical, and imperial data, is what is being used to time the stock market. I'm not timing the market for every day, but I know that if the markets have reached these all-time highs, it can't go anywhere but down. So when I start to sell off my assets, now I've gotten out of the way. I might not sell off everything, but I start to reposition my asset allocation. Instead of being 80% in stocks, I might only be 10% in stocks, and now 80% in cash, and 80% and 90% in cash, or so forth. So I believe in my philosophies you can time the markets, not the day-to-day markets, but we can time the markets to understand when markets have reached these major highs, when we should be selling, and when markets have reached these major lows, and when we should be buying. That's timing the markets. That's timing the markets. So, I believe you can. I believe people do it all the time, and so that's my thoughts about that.
But what about what this other person from Charles Schwab had to say?
So Mr. Bidioff, he what really stood out for me, was he said at the end of his quote, he said, throughout this downturn, we are reminding our clients that panic is not an investment strategy, and that trying to time the markets is futile. I disagree with that. I mean, because like back to what I said earlier, like we time a whole bunch of stuff, right? If you've been driving your car, I'm not sure the exact amount of mileage that a person puts on a car before they say, start looking to get a new car. But, if that mileage was 60,000 miles and you've been driving your car and your car has now got 75,000 miles, and you start saying, what, man, I'm start seeing a little bit of clinks in the car, I might need to start looking at getting something new. You ain't going to wait till the car go all the way out and get into the car. You're going to start saying, what, man, my car's starting to act up a little bit. I think I need to start looking for something else. That's timing, right? You're not waiting until you get caught flat-footed before you start making some changes. And it doesn't mean, you won't have some issues there, but it means you don't get caught flat-footed. That's timing to me. That's timing something. And, people time stuff every day in their life. time all kinds of stuff. So I disagree when he says it's futile because, like, I don't have any sort of data to show me that you can't time stuff. And I don't see the market as being any different. Long term, you can time the markets because typically when the market starts to do, when the entire market is moving in a certain direction, it's clear. Like now, the markets are falling, that's clear. No one is saying, the market's going to, no one is saying, wow, okay, the markets ain't really falling. Nobody's saying that because everything is falling together, right? When the pandemic was in China, you had people that were saying, man, this stuff is going to spread to that was timing something. They started saying, man, we got to start doing some things now before it get here. They're trying to put things in place before the virus got to the U.S. That's timing something. They're trying to be ready to go before these things happen, right? So, like, you know, that's, you know, yeah, I disagree. You can time it, and people time stuff all the time.
Okay, Wall Street. Well, that makes things a lot clearer about timing the market and your take on it. Where should people contact you if they have more questions about stocks and investing and just financial literacy in general?
If people want to ask me questions, they can go to my Instagram, which is Curtis Wall Street Carroll, and they can ask any questions they want to ask, and I will do my best to answer them. I like the questions that come in. Allows me an opportunity to express my point of view, and I love to, you know, go back and forth and have these dialogues, and hopefully they're helpful for people and give people a different perspective.
Great, and just to add, anybody listening to this or watching this video, you can also drop your comments and questions below in YouTube, and we'll make sure that Wall Street gets those questions. Wall Street, as always, it is a pleasure to talk to you. I always learn so much from you, and I'm really looking forward to one of our next conversations, which is something I'm particularly interested in, and that is using our 401k versus whether or not we should use unemployment. Thanks so much, Wall Street.
You're welcome. All right, y'all. Peace.